Okay, very good morning. Monday the 12th of February. I hope you had a good weekend. Going to get straight into the briefing this morning, starting with a quick overview of the charts. I'll talk about some of the main kind of headlines from the weekend, of which it's been relatively quiet, and then I'll hand you over to Sam and he'll look at some of the charts this morning and the setups for today and this week ahead. So first of all, just having a look, and it's a relatively quiet open comparative to obviously last week, where we had stocks had the worst kind of sell-off that we've had in multiple years. Good chart actually that I saw, to put it in a bit of context, seeing the S&P ended the record stretch of days without a 5% sell-off. Obviously, given the entirety of the move we had last week, managed to pull back a considerable amount. And as you can see, going all the way back to really what would be the middle part of 2016, the last time that happened, of which going through 2014, 15, 16, you can see the frequency this was happening. Fairly sharp corrections were quite common, and hence the reason why when you go 588 days without seeing such an occurrence, hence the reason why the markets all of a sudden, start to panic very short term. Whether that's warranted and whether or not we'll get a concerted pullback further from where we are at the moment, given this really steep elevation in prices we've had really through 2017, particularly 2018 was almost so aggressive, it was almost baiting this kind of price movement to materialize in the end, given how sharply we were rising after the corporate tax deal got signed off. But now we're back to this kind of 26.37 is where we trade actually at the moment in the S&P. Be interested to see how this week pans out, and really overall, as we're going to discuss shortly, this week is going to come down to one key data release, and that's coming on Wednesday from the US, but we'll get around to that in a second. The main thing is, over the weekend there's been very little fresh news, and if anything that means then that no calamities in the market, so a fairly steady ship, and European stock indices are on the front foot. You can see the DAX already up fairly significantly here in the centre left. US futures also quite sharply higher already. In the case of the Dow up about 170, the S&P up about 18. So again, the market kind of just gathering itself, if anything, and a lack of news probably just helping facilitate that after such a degree of volatility last week. Elsewhere in the currency market, though, has been a little bit of movement, and we originally saw dollar weakness when things got back underway last night. What was the reason behind that? Quite a few people looking at these headlines coming out in regards to Trump. Trump's budget will propose cutting $3 trillion. Set goal of reducing the debt rather than balancing the budget. This comes as he'll deliver his budget blueprint later on today, but the point being is that the second budget from the president is going to trim $3 trillion in spending over the next 10 years, but it won't be balanced. So he's not looking to balance the budget, basically, and the administration will tout lowering the debt relative to the economy. And so I guess you could say not being fiscally prudent meant that initially this was seen as a reason to sell the dollar, but ever since then, since it kind of bottomed out in the dollar index in Asian trade, it has come back slightly, and the dollar index at this present point in time is trading just slight negative, about 0.1%, but it might explain some of the uptick that we had, and this slight positive price action that we've got in the major pairs, albeit both have come off their original high seen overnight, but up around 30 pips at this current price point. Slightly weaker dollar as well, gold a little bit elevated. I wouldn't say this is really anything to do with a risk play. Dollar yen is basically flat. Gold looks to be more a technical breach, a little bit of that dollar weakness as we just mentioned. And we kind of shot higher at the recommencement of trade very early in the Asian session, nothing more than that. I won't be looking at gold thinking that this is risk off. It's outside of that, more of a technical move, I'd say. Looking then at the week ahead, what is the main thing? Well, today is very quiet. There's nothing really too much exciting going on, I'm afraid. So I guess when you're looking at the shape of the week, what's going to be important is allocating your attention to really certain points of interest depending on what assets you trade. I'd say if you're trading the pound, then Tuesday is going to be interesting, as to not only will Wednesday for the US reasons, but Friday specifically for the UK as well. That's because on Tuesday we're going to get the UK inflation rate. Although I wasn't here, I understand that there was a good call from Sam, who got it right with a hawkish hold. So the fact that they said that it's looking more likely or not that they're going to hike interest rates potentially May, if not a few months thereafter, which is much earlier than many were anticipating originally. And so inflation is going to be still key to monitor, just given the fact that we remain elevated at about 3% at the moment on a year-on-year basis. So you've got UK inflation numbers coming on Tuesday, and then on the tail end of the week you got UK retail sales, which obviously will get a good insight as toward the disparity, certainly between the fairly meagre growth in wages comparative to the still elevated prices of goods, and see how that is translating into the kind of key industry of which is the service sector in the UK, of course, and retail sales on Friday. The main thing, though, that to draw your attention to, and really is going to define probably the most direction for this market, and by that what I mean is you could be relatively contained prices up until Wednesday, and then the market can either really go one of two ways. Either this number comes in line and doesn't really shock people too much, or if we were to get, and what I'm talking about is US inflation, of course, an upside surprise, this will only reinitiate the kind of narrative that created the market volatility from last week, which of course is one that's based around the reasoning of heightened inflation expectations starting to materialize, and what this would mean then, a net result, a tightening of policy going forward, and certainly from the US more rapidly than the 3 rate hikes that are currently being telegraphed by the Fed. So this is what will be key, and this is US core inflation rate, and as you can see, it had been relatively lackluster for a long period of time through the summer really of 2017, had a brief pickup only to pull back, and then the last reading came in at 1.8%, which I believe at the time was actually slightly higher than expected. And of course this comes after the wage numbers as well, which we had from non-farm payrolls. So having a look, this is quite an interesting piece of analysis that's been done by our friends at ING. They're looking at different models that get run in order to kind of give you a bit of an insight as to forward-looking inflation expectations. And this is the New York Fed's underlying inflation gauge, which is actually a predictive model using both data and market indicators. And what you can see in this chart is the orange line, which is the core CPI in the US. So here it is, currently tracking at 1.8%. And this is the New York Fed underlying inflation gauge. Wow, check out the Dow. I'm sorry to just quickly jump in there. Just bring the Dow into a chart. Just exploded higher. Yeah, that's a minute chart on the Dow there I'm just sharing with you at the moment. So this market certainly is still very whippy. We've just popped literally within about 2 minutes a cool 100 points for no reason. That certainly from a fundamental perspective, there's been no new headlines that have come out. So just having a look, we've just broken that high that we printed overnight in the Asia Pac session. And it looks like just like what we were seeing last week. One thing to keep in consideration here is the size of the moves that the market has been seeing. And so therefore, rather than your normal fairly contained price movement, which is restricted to kind of ranges of about 100 points for an entire day, don't forget we went 1,600 points in 10 minutes last week. And so you've got to be just a little bit careful with these types of moves at the moment, trying to either counteract the move after it spikes or trying to jump into it. The risks are quite high, is what I'm saying. And I'll leave it to Sam. I'm sure he'll talk about this sort of thing a little bit more. But just going back then to this chart, the point I was saying about the New York Fed model at the moment, you can see here how it is pointing to quite sharply higher core inflation coming out of the US, and hence the reason why the market had such a shakeout last week. You can see on the Fed's model, it's up at around 2.5%, so way higher than where we are at the moment, and certainly a really sharp elevation from where the current price point is on the actual measure itself. The other thing, of course, is that wage growth, and it was initiated by that really strong wage number we had with non-farm payrolls about a week and a half ago or so now. But this is the NFIB survey, so this is usually the federation that looks at small businesses in the US, and they've said that surveys suggest that pay is on the rise at the fastest rate for more than a decade. So again, these are the reasons why the market is having this kind of second guessing at the moment about the validity of current market prices amid the risk of potential policy tightening given these rising inflationary conditions. All right, other than that, you've got for Aussie traders employment change, unemployment rate, that'll be overnight, kind of Wednesday going into Thursday. And then the other important thing to keep in mind is that Chinese New Year gets underway at the end of the week, and so that will run from basically Thursday until the 21st of February. The mainland markets are closed from the 15th to the 21st, and if what that generally means is that China, certainly mainland China, goes on complete shutdown. So that does have a meaningful impact to the volume seen from overnight. And if anything, that can almost exacerbate further some of the erratic price movement that you can see, certainly if algorithmic systems have anything to do with it. All right, going to leave it at that, and I'm going to let Sam come on. But just as a heads up for the later on this morning at 9:45, so about an hour's time, Piers is going to be on CNBC talking about all things markets, but importantly the current conditions post the volatility from last week. So I'll put it up, a link into the chat room so you can watch it live. Okay guys, have a good day.
Yeah, good morning guys. I think the best markets to start having a look at obviously here is gonna be the US equities, and just having a look at that Dow that did push above the morning high, if you like, from Asia. In terms of where we could get to now, if we just get a horizontal line here, and you've got a bit of resistance that we found back in the end of Thursday evening, and then it's going to be quite choppy to the upside. I think safer you got what was the low Thursday before we did then break on through, which could offer some potential resistance to the upside. But in terms of the S&P, similar sort of level around here, 26.57. That could potentially cap that upside, and I think it's going to be an interesting day going forward, a week as well, just to see where this market does end up. The interesting thing from last week, I must have put this onto a 240-minute chart, was the failure to make a new low for the week yesterday. You can see here, and now I'll lower it back down as well. You can see here marks up, and I'll just rectangle that area, was the week low we made on that Monday morning, and then this here come in Friday, probably about 6:30, rejection of that previous low, and the 200-day moving average sort of came into play as well there for the S&P before rallying quite sharply to the upside. You can see this the move into the close. How big that move is there, 4%. So it'd be interesting to see where we come to now. But put this back on a 60-minute. I think this point in the market for both the S&P and the Dow is going to be an interesting one, which could cap the upside to the morning. Let me just get a trend line on there that we have sort of broken overnight as well. Nasdaq's going to look pretty similar in the fact that we have pushed higher, and where could we find a bit of resistance? Well, that similar level is more like R1 for the Nasdaq, but you also have some previous pullbacks on that Thursday, which we sort of have to take into consideration, and also the overnight Thursday morning low as well. So it'll be interesting what will happen there. Remains to be seen. I think it's still one to sort of tread lightly going forward. I mean, you want to see the liquidity come back into the market before making a definite decision. It would be a case of sort of, if you do want to get in, you know, you're getting out relatively quickly either way. Going forward, cable, which caught my eye just before we came. Well, I came onto the mic. You've got a decent resistance point. If I just mark that up, that we found here on Thursday after the Bank of England, 138.98, basically the 139 handle in the futures. I would definitely keep an eye on here for any potential upside resistance. It'll be interesting to see where the dollar index is down slightly at the moment, as you can imagine from these markets, the currency pairs on their highs, but whether we do get a bit more strength coming back into the dollar or not. If we just pull this back, you can see a nice downward trend really. I would also get a trend line from the previous two highs to see if they mark up with anything. It might be that we've just had a bit of a break of that this morning, but well, not yet. But you can see just how good that high looks. Let's put that back onto a 15-minute. The top of this potential trend line, albeit roughly drawn, and the low from the Thursday post Bank of England. So interesting area, 139 handle, technically going to be a good area of resistance. Euro, with this dollar weakness over the last sort of 30 minutes or so, just pushing to its highest point for the morning, other than here, you know, just breaking through the Asian session low, if you like. R1 will be capping that with the highs, and again, similar to the pound, it might be worth to see if you can get any trend lines coming up. And here you can see really nice. It was almost a decent trend channel last week actually, that we respected to the downside as well. And you can see this morning having capped that around the R1, another test of that. A bit more dollar weakness, and you could expect you know, a push through there, but even then you've got some strong, what were previous support levels to take into account. This one here looks quite interesting, I have to say. What's this, the low of the 6th there as well. Have a quick look over at European equities, which along with the US, just pushing higher at the similar sort of time. So the DAX here on the futures, just looking here, just touching that R1, you'd expect some sort of resistance. And if not, you've got what was sort of the low of the morning of the 3rd, which is a nice, well, for the DAX, almost you could say double bottom around here. So I'd expect for all US and European equity markets some resistance to come in soon. However, you know, if we were to get a break on through and the sentiment was really to change, you know, that failure to make a new low last week could prove quite important. But as for the case was last week, you'd want to sort of half be careful about any trade you're getting into for the equity markets. Oil having a little bounce as well, perhaps helped by some dollar weakness, and again you can see a decent down week last week, sort of 7 in a row, before having this bounce around here now. Yesterday, or should I say Friday's high, 60.77 and a $61 handle, not too far away from where we are now with that R1, would be an interesting point of resistance. However, you know, really strong rejection again. We'll just mark this up and then go down to that lower time frame from Friday evening around 6:30. You can see here, so would be just cautious about looking to continue the trend that we saw last week. I think sometimes this can be what catches traders out, as they come back from the weekend, expect everything to be exactly the same as the week before. You can see quite clearly at the moment equities are higher, oil is higher. You know, you've also got a bit of dollar weakness in the market, which we didn't really see too much at the moment. So I'll just be wary about, you know, trade it might be that you're looking for a further, well, let's just go back for equities for an example, that if you still have that downside bias, yes, by all means, you know, here you have the resistance level we talked about, 26.57, and you could expect a bounce from there. But it might well be that the safest trade today is to wait for this, you know, this low here to go that we made at 7.45, because then you do get, you know, the confirmation that last week's trend is perhaps looking to continue. So, you know, ideally, you know, to sell, I think, for these markets, you know, if you're counter trading for the day, you don't want to be in it too long, but for that confirmation, look for maybe the lows of the day to break, and then, you know, get in with that increased volume perhaps. Have a quick look over gold, which has been you know, an interesting market to say the least, in terms of, you know, the direction it has been making. You know, back end of December into January, you can see, well, beginning of December I should say, we moved considerably higher, and then really, you know, even with XPs coming down, we've seen, you know, gold weakness. So just an interesting market. We found support here on what was Friday morning's high, as you'd expect. First sort of test of that to be the strongest, and even if we do break through there, you've got some other interesting points of support just below as well. Just want to have a quick look over at the FTSE as well, and again you can see from that sort of 6:30 on the Friday, these markets that had, well, pretty big down weeks, if you like, or even, you know, just heavy selling on into that Friday evening, good support which has pushed us higher through here, but also coming up to those, pretty much for all equity markets, what was Thursday morning's low to act as potential point of resistance. Just a quick look over the other currency markets just to wrap up. You've got the dollar yen here, just, well, failing to sort of push through that low we made overnight, and sort of stuck within this range really. I think another market where you can get this trend on, let me just mark that up. Again, it's going to be quite rough. I would have that, you know, better drawn up, but it might well be that if we can get a test of what is the high of the day later on, in a line with this trend line, it would be a decent opportunity. Aussie dollar, you can see here, just sort of fighting that trend that we had last week, but albeit where we are now is probably completely in the middle of the day's range. So for these markets, I think Aussie dollar here, you can see, let me just get a rectangle, make this a bit clearer. The R1, the high from Thursday to cap the upside, and then really if we can get below the pivot and what was Friday's morning's high as well, we'll break through there, you know, you're looking to continue that trend. So I think, you know, be careful today. There's bigger things later in the week, obviously, with the US inflation numbers on Wednesday. I wouldn't be expecting necessarily too much for the currency markets today, and be careful about looking to continue the trend that we had last week. You know, it sounds simple, but, you know, buy when the buyers are in control and sell when the sellers are in control. We'll obviously be in the chat and trading live throughout the day, so any questions, please do let me know, whether that be in the group or a private message or whatever. But if not, hope you all have a good Monday and good rest of the trading week.